What's going on right now, do you think? I've got a lot of theories about liquidity, but how are you dealing with this?
Yeah, I think the disconnect in the market's probably some of the strongest I've seen since I've been doing this 7 years now, right? So the disconnect between the reality of what's actually happening, kind of on-chain growth around revenues, applications, users, all those sorts of things are smashing new highs, and prices just continue to fall down. I mean,
Yeah, I looked at this at depth, and I was just writing Global Macro Investor over the weekend. What it seems to be is this, it's liquidity as ever. And because the government shut down, they can't draw down the Treasury general account. That's now like $1 trillion plus. So it just keeps building. It doesn't get spent because there's no workers to pay right now. Meanwhile, there's no reverse repo to drain to offset it. So they've got nothing to offset it. So repo rates have been blowing out. They've had to give emergency lending in repos. So it's kind of, we had this in like 2018, 2019 before. And why it's hit crypto is because the entire asset management world is underweight tech. And so they're chasing into year end because I saw the stat yesterday, 80% of all funds have underperformed the market this year. So they're all chasing that, and crypto being at the margin in liquidity gets whacked in the meantime. And until the government reopens or the Fed get forced to, well, they're going to NQT, but then they need to increase their balance sheet and all of that. But as you say, the dichotomy is that the crypto economy is actually pretty vibrant.
yeah, I mean, we've seen this bizarre reversal where crypto is kind of, broadly seen as the kind of hype sector, right? Whereas I'd argue it's the reality sector now in terms of profitability and growth. And we're probably seeing the reverse of what's kind of historically been the case of kind of overhyped, underdelivered, where we're actually seeing most things that, have built utility over the last 5 years, over-delivering and getting not rewarded at all.
And one of the things I've looked at is, like, a lot of people complain that this year has not been like the classical fourth year.
Yeah.
Right? And we've seen it. We've had no alt season. If you look back at stuff like everything ex Bitcoin and ETH, they've not gone to new highs this cycle yet. It feels like there's still a lot to go. I did a lot of work on this, and I found out that, a lot of this 4-year cycle is actually built on the debt cycle. And in 2021 and 22, when rates went to zero, they pushed out the maturity of debt by a year. So it's all to roll $10 trillion to roll this year in the next 12 months. So it feels like we had sort of an interim year. I still think we finish up strongly, and I think it goes a lot longer than people expect. How are you thinking about the cycle itself?
Yeah, I think the cycle's a difficult one to sort of get your head around because the construct of the market's changed so much, right? So to me, a cycle is more robust if it's the same group of people trading the same kind of assets over the same kind of timeframes. But the makeup of ownership of crypto has dramatically changed over, even the last 2 years, right? We've seen the influx or the liquidity sink of all the Bitcoin and Ethereum, and now Solana starting to go into ETFs. So I think we have seen a transition of ownership of people that will look at the market in a different way. So personally, I would expect the cycle to break down and lose, I guess, what we've seen traditionally, where you've had pretty similar group of people trading pretty similar assets with a pretty similar mindset. Market's probably telling us a different story though. So, whether we're right or wrong, let's see in 6 months.
The other feature that we've seen, and not surprisingly either, because we see it every cycle, is OG selling. So we've seen a bunch of people, 44 billion, I think was the number I saw.
Yeah, I think that, and I think it gets exacerbated by kind of slow news days as well, right? When markets are down, when markets are weak, people kind of looking around for, what is it? Start to focus on older wallets. They'd probably get a bit more attention than they would if, the markets are strong on that day. But I think it's an inevitable kind of, as momentum starts to move, you'll see some of that sort of longer term capital take their money off the table and move on.
Yeah, because if you are one of these people who bought Bitcoin at $10, right? You're just like, well, I'll take some off at 100,000, because you're suddenly up 10 billion. It's like Novo did that unwind for a Galaxy for an individual. That was $9 billion.
Yeah, it's an insane ability to actually hold through that period, right?
I know a few of them as well.
It's incredible.
I just don't know how they've done it, but suddenly it's like la la land prices. They don't need Bitcoin to double again. If you're worth $10 billion, is the extra 10 billion, if it doubles again, worth your while? No. So they just kind of use maximum liquidity to just try and ease out.
Yeah, and I think that's a natural sort of progression of assets as they sort of move over time, like founders selling out of tech stocks and those sorts of things. I guess from a liquidity perspective, if you think about where Bitcoin is today versus say 2 years ago, just given the size and scale of both the ETF market and the futures and derivatives markets, it's in a better spot to handle that supply than it's probably ever been. So, I think the market's risen to kind of be able to meet some of those liquidity demands. But you'll see this sort of indigestion from time to time as assets continue to grow and the space continues to mature, and we see ownership sort of move from the financial engineers, for want of a better word, hedge funds, institutional investors. Ownership in crypto is only going one way, right?
Yeah, exactly. And the other feature of this market is, you alluded to earlier, we've had no real new liquidity in outside of the very top end. And that's a function of, this has all been generally driven by retail. And retail in most places don't have any money because, prices went up a lot. Interest rates haven't come down much yet. The economy still, the actual economy, look at the ISM survey, still below 50. So it's not even expanding. And then you're like, well, obviously they're not throwing money into crypto because they don't have any.
Yeah, I think the other factor to put on the table as well, there's been pretty good money to make in some other speculative sort of high risk sectors as well, right? So a bunch of AI money, quantum computing stocks, those sorts of things. So, the attention around, particularly around that speculative dollar, has been kind of split, I would say, around crypto as well, and I would put that as a factor. I think what crypto is waiting for, and I think a Clarity Act is we've seen Genius Act and Clarity Act on the horizon as well. What it's waiting for is that transition from, and the transition has to happen, right? Because the ownership of crypto is just so skewed retail versus institutional versus anything else you look, is just those building blocks in place to allow that institutional ownership to kind of take over. And, I would argue we've seen that in Bitcoin and Ethereum through the ETFs. It's the broader sector's term for that to happen over the next 12 to 24 months.
So you obviously like this video enough that you've got to the end. That's quite a big task. But listen, do me a favor, hit the like and subscribe button, and also check out what video's next, because I think you'll love it. But if you want even more, and when I'm talking more, I'm talking about member-generated ideas, incredible alpha, research, everything there to help you in your journey, just head to realvision.com/join for the best financial intelligence out there and the pure alpha that's within the platform.